Hey, what's up, guys? It's Dan from Crypto Camacho back here again with Rod Spectro, founder of Hypester, creator of Spectro M Indicator, and he's the creator of all these plugins that we have been talking about doing this mini series on. So today, guys, we want to talk about the Alpha Omega Volatility Index, and it's again another plugin, another indicator that Rod has created. We've already covered the Spectro Oscillator, Spectral Range, and the Ultimate Trend Analyzer. Now we want to dig into the Alpha Omega Volatility Index. I keep catching my tongue on that. Welcome, Rod, to the show. How you doing?
Thank you. Thank you for having me back, Dan.
Cool. Let's just dig right into it. I want to get right in because every time we make these videos, I'm like super excited to go try it out. But let's talk about volatility. Let's talk about Alpha Omegas. Kick it off wherever you want to start.
All right. So basically, the Alpha Omega kind of came from, like, I don't think there are so many indicators that read volatility. There are like a couple ones that everybody uses, like the ATR. But you see, the ATR kind of, have you ever used the ATR? Have you ever, like,
No.
So basically, the ATR just tell you. I'm just gonna pop it in there so you can
Sure.
see it.
So we could dig right in.
So basically, the average true range like tells you how much the price can change within the next candle. Like, so the bigger it is, the bigger the next candle could change. So basically, like, if it's really high, it means that the next candle could oscillate a lot.
Okay.
But doesn't really tell you the direction, and that requires you to use other indicators, to show you direction, momentum, and levels and stuff like that. And I don't, there's the DMI, which is not so bad, but I never found something that actually showed me what I wanted to see. Like, when there's volatility in what direction is going and how strong it is.
Mm-hmm.
Because I have like three things that I always try to look for when I'm trading, which is momentum, direction, and levels, interesting levels. So direction, basically, like, should I short or should I long? Should I buy or should I sell? Momentum is like, okay, I'm gonna buy. How late am I?
Mm-hmm.
Like, is this the middle of the movement? Is this the end of the movement? Like, am I too late? Am I, so momentum tells you, like, how big is their profit, or like, should I take profits now? Is it losing momentum? Is it losing strength? Is it going to reverse? And then, interesting levels, which is basically like support and resistances, which like let you know, like, okay, it's getting close to a danger zone, so I should keep my eyes open. So those are the three things I always look for when I'm trading. And when it comes down to volatility it's an animal on its own, like, because volatility tells you not only direction and movement, but also tells you potential.
Okay.
And potential is good because as a trader, you need volatility.
Mm-hmm.
Volatility is what pays a trader off.
Okay.
Investors, in the other hand, like guys that make decent money in their 9 to 5 with their companies, they have some cash, and they don't like to invest in hedge funds and stuff like that. They're more conservative. They usually buy like the very opposite of volatile stocks.
Sure.
Like blue chip stocks like Apple and stuff. And as you can see, not always work out, because right now, if you look at the S&P 500, and thanks to Donald Trump, the economy is imploding. So if you look at it, probably all the biggest 500 companies in the United States are basically losing more than 20% of their value in the last month.
Yeah.
So many people would think, oh, that's horrible, right? No, it's great. It's opportunity for traders, because when you see huge drops, it means opportunity.
Yeah, definitely.
And that's what the Alpha Omega tells you. And we're gonna see how it works out now. Okay. So this is 45 minutes.
It's great. Wait, you gotta share your screen.
Yeah, right. I always do that.
No worries. Just want to make sure.
For me. So let's pick a different asset, because we're always trading Bitcoin and stuff.
Yeah.
So let's wait for it to load. All right. So we're looking at Bitcoin, and down here it's the Alpha Omega index. So we're talking about big chips, blue chips. So Microsoft, Apple.
Sure. Yeah, let's go to stocks.
All right. So Apple. Let's look at the overall so everybody can kind of understand what we're talking about. So you see, this is a trending asset, right?
Yep.
Basically, Apple has been growing. We could look at Amazon, whatever you want. Those are trending assets. You know, they're solid, stable companies that tend to grow over time. Okay, so trending assets hardly ever have alpha and omega warnings. Why? Because they tend to not drop so much. You know, they tend to grow, and that's why, from a trader's perspective, when you see a huge drop, like the one we're just talking about here, my friends, and that's what I'm talking about. You see, it doesn't matter if you trade stocks or crypto. You're just exposing yourself to risk. And look at this drop.
Wow. And you're on a day chart, right? Yeah, you're on a day chart.
Yeah, this is a daily chart. So basically, this means that Apple has lost 35% of its value in the last 3 months. Wow. And this is it's something that you want to know.
Yeah.
It's probably the biggest and the most valuable companies in the planet, and it just lost 35% of its value. And something nobody's talking about. But now we're gonna talk about the alpha and omega and what is it about. So trending asset, it's going up, we all know, but then it dropped like a bomb.
Yeah.
Okay. And you want to trade it when you start to see those guys here.
Okay.
You see the alphas and the omegas, they're an extra layer of confirmation. I like to use them with the most conservative signals. Okay, so let's zoom in so we can actually see that a little better. So what we're talking about here, you see those little circles here? So they're basically I use like a drag racing concept, because here's the thing, when you're trading live real movements, sometimes like a condition can become true, but then it instantly reverses because the market's live.
Sure.
And some people, especially on the technical trading world, they call that repaint. But you see, it's just how it is. Of course, you can code stuff, in order to avoid that, and to cut some signals out. But from a trader's perspective, from like a guy that has been trading for a living for the last 5 years, 6 years.
Yeah.
I like to have things attached to the real live data. Why? Because I'm trading on real live market.
Sure.
And when I have a signal and it turns off, it means like, okay, it's kind of reversing, but it's not. So it gives me an extra layer of information. But when it's like 0 or 1, it's binary. It takes out the potential. It takes out depth of the information, and that's why I created the alpha omega, a layered thing.
Hence the index, right? I mean.
Yeah, exactly. Because you see it growing and going down. So you see it growing in momentum. So basically, you have the middle line as always, and then what? You're gonna ask something?
Yeah, finish your thought. Keep going though. Finish your thought.
It's basically a centered oscillator. You have the middle line,
Yep.
And under it tends to be bearish. Above it, it's a bullish signal.
Yep.
So, what was your question?
So my question is how do you actually evaluate the dots, like the strength of the dots, or like how do you actually use that? Because it conceptually it makes sense, but practically how do you use that chart, the actual dots in the chart, right? And the alpha signs, right? I know you're probably getting to that. So
yeah. So basically, it's very easy to understand that the more dots you have, the stronger the signal.
Okay.
But how do you actually use that? So it's always divergence. when you're trading reversals, you're looking for divergences, and that's what we have been talking about. When you're trading, trends like we're talking about the ultimate trend analyzer, you're not looking for divergence. You're looking for reversals, and then you just buy it and you flow with it, you surf it. But when you're buying reversals, you want to know when that trend is about to change before it changes, and that's why the divergence is used for you.
Yep.
So what do you want in this case? You want a strong, powerful, bullish signal during an extreme bearish moment.
Yep.
For instance, here we see 3 alphas, and I'm gonna get them highlighted for you guys so you see what I'm talking about. All right, so you have 3 of them, and as you can clearly see, look, this one is on the first level, this one is on the second level, and this one is on the 4th level.
Oh, so you're measuring the dots there, and the levels of the dots increasing?
Exactly.
Okay, that's what I wasn't quite clear on, but that makes sense. So
Yeah.
as the dots either increase or decrease, if they increase, it's a bullish sign, right? Yeah,
Exactly.
okay. That makes sense. So you're seeing the
The
divergence
more
right there.
dots you have, the more potential volatility you have in that direction,
Got it.
right? For instance, here you have a lot of dots, but you don't have the alpha. So I'd say that's a weak confirmation. Yeah, I'm using the ultra conservative mode, right?
Yep.
We also have, aggressive, which I don't really like, but if you're scalping and you see, then you get a lot more signals.
Yep.
This is for the guys that are, trying to pick the very bottoms, the very blah blah. It's, that's not how I like to trade. I always play super conservatively because I like to trade less and to win more. Like for me, not losing it's a lot more important than winning. You know.
Sure.
So going back to the concept, you can see the divergence once again. Look, price is going down, but potential volatility is going up.
Yep.
That's the first big warning sign. And then the warning sign is like, okay, but why wouldn't I buy on the first alpha? Well, it depends. Like, do you like to, how sure are you?
Yeah.
At this moment, you just have 2 circles in an alpha. So I'd say like you're 50% sure, probably 30% sure that, it's going up.
Yeah.
This one is a little better. Here you have 50%. And it's a good signal, but not good enough.
Mm-hmm.
Here, it's the strongest signal possibly. And let's look.
Okay.
You see?
That's like the max strength of, okay, this is probably going to make a move, kind of. Because we've already tested it twice before, actually 3 times. The very first one, then the 2 alphas, and this is the 4th time we're saying, look, there's another strong divergent. So you're kind of layering the signals, yeah, to give you more, to give you a higher probability, right?
It's the peak of the divergency.
Now, let me ask you this though: do you find that you will sometimes miss a lot of trades because, let's say, that 4th one never showed up, and let's say the 3rd one was the last one, right?
Oh yeah.
So do you miss some trades? I'm guessing.
You see, what is missing for you?
Yeah, good point.
I'd say like I avoided a crappy situation.
That's true. Yeah.
That's what I'm saying. Like, and that's we should talk about the screener in the future. But like, if you avoid crappy hands, it's just like poker, man. You just play when the odds are in your favor.
Yeah.
You don't want to play a 2 and a 3. You want to play like a pair of aces.
Yeah.
Because statistically, when you have a pair of aces, you have 80% of chances of winning, and that's just math, bro. There's nothing you can do about it.
How do you kind of train your mindset, or like get that out of your mindset? Because so I have a problem where I still do this. What's that?
It's easy. It's very easy.
Well, what I do, just to give you what I do is I'll always think I need to be in this trade, even though I know or think it's probably going to go down. I think, okay, it's probably not going to go down that much. It's probably going to go down 1 or 2%, right? And then it's going to bounce at some point. So I make myself wait, but it actually is a bad habit. It's a terrible habit because then I could
Yeah.
lose on the fall. But I keep going back to that mentality. Like, how do I get out of that mentality?
Oh, you just need to lose more money.
Okay, fair enough, fair enough. Because I feel like if I just were to say, but it's hard for me to watch missed opportunities, and I think that's the problem. But it's much safer. So I just got to train myself to kind of not do that, I guess.
You see, like, I think, and that's another thing that, people, when they hear, from outside, it sounds like one of those techie things that you're like, oh, he's just trying to be cool. But you see, what teaches you, it's the losses, man.
It is.
And that's why I think, kind of unrelated, but that's why I think social media kind of sucks, because nobody posts their losses.
Right.
They only post their wins.
Yeah.
And it's not only talking about stocks, man. Check it out on Instagram. Who posts like, that's me waking up 5 a.m. in the morning and working hard, and my boss hates me and I hate my job.
Yeah.
Nobody fucking posts that.
Yeah.
Even though that's what makes you succeed in life.
Yeah. No, it's
right?
it's a very good point. Yeah. I mean, yeah, it's a good point.
For instance, my biggest loss was about $250,000 in a weekend.
What?
And after that, I've never, ever, fucking ever did the same thing ever again.
Yeah.
Ever. Like, it was instant learning.
Yeah. I mean, that's a shitload of money, and I mean, man, you will not like that again.
That was 100% of all my crypto fucking profits of a whole year. In a day, man. 36 hours.
Jeez, man.
But you see, most expensive lesson ever, but I learned it like Buddha.
It's like an MBA, man. All of a sudden you're like, all right, I'm never going to do that again. Boom. All right, what?
You see,
sorry, go ahead.
Man, there are some really stupid people, and me included, because, for instance, motorcycles, I love them, but I've crashed like bad, like destroyed all of them. I'm buying a new one, So...
No, I get it.
That's why I think some people are just not built to trade, because some people just don't learn with their losses, and I mean just how much you can afford. Yeah. But going back to the indicator again, you see very clear uptrend, and you see it's when you average it out, you have this strong backline that goes all the way from 2009, and you see some people get mad at me like, oh, this line is a support line. I mean, go to hell, man. It's just try to understand the concept.
Yeah, totally.
Don't be so so people are darks. Like especially nerds and like very technical guys.
Well, of course it's. Of course it's the trend. It's just like, but that's like the lowest resolution you can get. So like, what you're doing is you're saying let's break that down because the trend does not always hold. And if you're spending $100,000 and you're investing, let's make sure the trend holds. So let's break it down to these more fundamental, like higher resolution activities. Like, I mean, I totally.
Yeah, if it's a support or resistance, it's just a fucking imaginary line that kind of tells you where it's going. Like that's it. Why do you have to go all dark? Like, oh, it's a support level, and like all technical. I hate these people. But well.
Sorry, keep going.
We're looking for divergences. In this case, on the big vision, it's still an uptrend, but in a more zoomed in situation, it's a downtrend. Mm-hmm. So you see, look how interesting this is. The first signal we have, this one, it's here. Look how far it is. Mm-hmm. This distance. Remember, we're talking about derivatives and integrals. I don't think it was on the videos or something about math. But the distance, it's the risk. Yeah. More distant this line it is from the long ass support line, right? Riskier it is because if you buy here, the trend, the odds are that it might go. Let me see where's that your risk could go all the way down here.
That is a very important concept. Keep going. I want to reiterate it, but keep.
Yeah, it could reverse, sure, but at this point, that's a risk, man. Why do you want to trade here? Why? You have a crappy signal, you have a huge risk, but people do it.
Yeah.
People just do it. I don't know what to tell you. Like again, now you have a slightly crappy signal, which is here. Look at your risk. Why do you want to do it, man? Why?
Yeah.
Why? Like.
And that's just that's literally just basing it on the support and resistance trend line. So like even without Spectro, that concept I think is very valuable in and of itself. But then when you couple it with the indicator itself, it like really clicks in. Like that really makes sense, like a lot. And then when you frame it with like calculus and integrals, I mean that's a whole other conversation. But like it really makes sense. Like keep going.
For instance,
yeah,
what Spectro would do for you, it's actually draw those lines for you. So like if you're a beginner and you're not sure, exactly where to draw those lines and shit. So, let's go here to alto pivot levels. In this case, I think full Fibonacci would be better because they're just more complete and bigger. They would just draw those lines for you, like that's what it does.
Yep.
You see, that's basically what it does. Let me do adaptive so we see a little better. Probably, I think it might be a little more comprehensive.
Yeah, so it is basically kind of going with the Fibonacci too. Yeah, that makes sense.
You see, it basically tells you all those lines, and what those lines are. Those lines are your targets.
What's where it actually bounces, like right there at the bottom? What Fibonacci level is that? Is that like a 7-8 or like a? I can't really.
In this case, that would be the very medium one. Like look, let me do the full one.
I'm just curious.
Yeah, it's just that it's too zoomed in, and then you cannot see. But if I turn off the out, oh crap! No, don't do that because I'm gonna get all this stuff drawn out. But if you zoom out, you see there are other levels here.
Yeah.
You see, so it's actually the very middle. You know.
It's like a 50% one. Yeah.
Yeah, it's right on the verge of reversing. Which look. It's close to the support line we draw, and that's what Spectre does for you. You don't have to know all this stuff, zoom out and blah, 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 blah. Basically, Spectre just does that for you. You know what I mean?
Awesome. That's really good. That's really, really important concepts there.
Yeah, that's what I'm saying. Like, Spectre cuts your learning curve by years, perhaps, like learning candlestick patterns, how to read trends, how to read volatility, blah, blah, man, that's some hustle.
But I can't state enough though, like to people, like look at the charts for a while. Like if you're a beginner, I mean, go ahead and use Spectro, of course, but like look at the charts like every day for a while, and that's what I've been doing for quite some time, like a year now, and this stuff really makes a lot more sense. And especially when you look at it in the framework of Spectro, it's like it confirms like a lot of what you've been watching, and you don't know why you're starting to understand things. This confirms a lot of it, like the concepts. Because I remember I'd look at charts for a long time, right? And I started to notice the patterns just visually. Like, okay, when it gets to here, it tends to bounce. Like I just visually started to realize that. And now, though, it kind of puts it into, like, it actually, like, makes sense mathematically and just from, like, multiple angles. It just makes a lot more sense, right? And now I'm starting to understand, like, visually why was it looking like that, and I had these feelings. Now I can confirm them, like, technically, right?
Cool. It's just also, I think it's important to put some skin in the game.
Yeah.
So I feel like if there's not a financial risk for you, it's just basically mental masturbation.
Yeah. Yeah, totally agree.
But I think it's also important to understand, like, I know I'm kind of biased to say it because it's my product, but I'd rather risk $50 a month and learn some stuff than actually risk $200,000.
Yeah. Yep.
So at least if you're paying something, it doesn't have to be Spectro, man, but pay something. Yeah. It's like going to the gym. If you pay for the subscription and you don't go, you feel bad. Yep. Because like I'm paying for this stuff and and I'm not using it. So you have to put some skin in the game so you feel the risk. Yeah. Of course, the $50, it's not really a lot, but it's something, and it's gonna cost you definitely less than if you're risking like, fuck Spectro, fuck the courses, I'm just gonna put $100 the $50,000 there and I'm gonna buy some blue chop. You know, man, if you did it, you know, let's say you decide to have this very smart idea like 3 months ago, man, I'm sorry to tell you, but you lost like $20,000 in your investment. You know, and you bought Apple. That makes it twice as more stupid.
I know, right at the top, huh? I would put a challenge out there to anybody to, like, literally for just even education purposes. If you're not confident about trading, if you are an intermediate trader, if you're like, you know, familiar, definitely use Spectro and you'll get it like really quickly. If you're a beginner trader, though, I'd put a challenge out there to, you know, take $100 and literally trade with $100 and use Spectro, which is $49 a month. Do that for 6 months, and it will cost you like, I don't know, like $300 or $400 at the most. And the education you'll get by trading that $100 using Spectro will be better than any course that you buy. I 100% guarantee it. Courses are not bad. Definitely go get courses, look at courses, read them, research, you know, whatever. That gives you like just knowledge to bounce your reactions off of when you're trading. But do the hard thing and just spend the $100 and, you know, get Spectro and do it for 3 months, 6 months. You'll be blown away at how much you'll learn, just like very, very quickly.
You see, man, then we get in a very polemical area, which is, you know, the whole education market. And that's something that, you know, like I have like this tiny little course that is basically, I'm not going to say it's not even a trading course. It's more like a, you know, a technical analysis course, kind of going overall, like how the indicators and work and such. But when you buy courses, you're basically buying strategies.
Yep.
You know, like you're buying someone else's idea, someone else's way to make money. But you see, man, depending on the course, especially the cheaper ones, it doesn't really teach you how to think.
Yeah.
And that's where I think not 80% of people screw up.
Yeah.
Because they just, you know, they want to find the magic formula. And how many times you had to listen that there's no magic formula? Mm-hmm. You know? And if you get an indicator, whatever it is, it doesn't even have to be Spectro, man. Because, you know, I don't want to seem like salesy and stuff. Sure. But just pick some indicators, you know, and use them for several months and whatever it is. And you see, one thing that I do all the time is to think. I think about the stocks, you know, about the indicators and the math all the time. Like sometimes I'm working out and then I might be pushing, you know, like bench pressing stuff, but I'm like, yeah, man, sometimes the AGX is, you know, going that way and, you know. Awesome. Think about it, you know, learn how to learn by yourself. Man, we're always talking about it, you know, like how I personally, in my opinion, I went to 2 colleges and that was like the worst fucking decision of my life.
Sure.
Waste of time, waste of money, useless shit. You know, I know if you want to be a doctor and stuff, great. You know, you need it.
Sure.
But I don't. I want to be rich. So college is pretty much useless for this shit.
Sure.
So, because college doesn't teach you how to think.
No.
You know, it gives you a strategy. Once again, you know, like, oh, learn this, and that, and you're an engineer. No, you're not, man.
Yeah.
You know? So it's the same thing with trading. Like you buy a course and you think you're a trader. Man, you're not. You're not a trader. Mm. You're a trader when you look at the charts and you start, you know, to creating strategies by yourself. You understand what's going on by looking at it. Mm-hmm. So that's why I agree with you, Dan. When you buy Spectro or whatever indicator you choose to follow and you spend time thinking, that's when you're actually becoming a fucking trader because you're actually producing something real with your mind. Mm-hmm. You know, you're learning how to use the tool. And you see all those things that I'm telling you, you know, those strategies, they came from me analyzing what I created. Like, it's funny because a lot of people they think that I have this idea, then I create from it, but actually it's quite the opposite. You know, I just try to put some math formulas over there that kind of cover what I'm looking at, and then I just throw them there visually in a way that I think they're useful. Yeah. And then I try to look for strategies. I create the strategies from something that I don't even know they're gonna work or not. Mm-hmm. Many times, I create like a strategy, and it just, I spend like 4 days coding, and then it doesn't turn out great.
Yeah,
it doesn't make sense. So going back to the strategy and the Alpha Omega. So once again, you wanna buy here? No, because it sucks. Because your risk is huge. Here, 50%. Sure, seems great, but is still far.
Still got a gap.
And then here you have a great signal, the strongest signal you have, you know, very close. Look, and then it's here. It's goddamn here.
Yep.
You know, that's a good one.
Yep. It's almost like this is still a good opportunity. Sorry, keep with your thought, but
definitely, most definitely,
still a great opportunity. I mean, yeah.
Oh, yeah. I think if you're a long-term investor, I don't like to give financial advice. I'm not a professional trader. If it was all your money, it's not our fault. But, you know, I think that's actually, you know, if Trump doesn't screw up more, I think that's a very good buying possibility. You know, like if you like to buy and hold for years and stuff, I think that's actually a good moment in general. You know, like for Apple. Man, let's look at Amazon for instance.
I mean, yeah,
you're gonna see that it's about the same stuff because you know they kind of behave similarly. You see?
Yep.
That's a beautiful stock to trade.
Oh, wow. It just bounced recently, or in the last week or so, last couple.
But you see, it's actually really, really good. Look, all those alphas here. Look,
that would have been
right
a
there.
Spot. Yeah, that would have been a money spot.
Once again, right there. Look, right there. And then you have like they're not so great, but right there.
Yep.
You know, and close to the Fibonacci levels, which is also very interesting. You know, like what else do you need right there?
Yep.
You know? And of course, here we're trading reversals, you know, like bouncing and bouncing and bouncing. Sometimes what I like to trade, it's, you know, the obvious. For instance, you have this downfall here, and then you have a smaller correction. This is a trade that I like.
Yeah.
I like to short this somewhere here.
Okay.
Why? Because it's obviously going down. It's a downtrend. Okay.
Yep.
It's close to, you know, like true levels. You know, the candles themselves, you know, they look like reversal candles. The wicks are huge, means uncertainty and all that shit. And then you have something like this. Look, this candle here is this thing here. So you see why you don't need such a strong signal when you're trading with the trend. Because it's kind of obvious already, you know, like when you say it makes sense already. Because when you're trading with the trend, you don't need, you know, the safest and the strongest of the signals.
Right. Yep.
You know what I mean?
Yeah.
And it's not a bad trade, man. Let's pick the, you know, I always pick the middle to be a little more. And those are stocks. I want to be very clear. Minus 13% in case we shorted, let's say, pure profit, 10%, right?
Yep.
Your target would be the Fibonacci level, which, you know, pretty damn obvious. Yep. So you shorted here, target there, boom. 13% in a week.
Yep.
And we're talking about stocks. We're not even talking about, you know, like crazy cryptocurrency, you know, or Forex with 500 times leverage. We're talking about blue chip stocks.
Sure, yeah. Okay. Well, yeah, let's, I mean, you could use this for Forex, stocks, crypto. You could really use it for anything. I mean, I think I love this tool. I'm excited to try this tool again. I want to use this and combine it with some of the other ones that we've been talking about. And I mean, I hope this mini course has been, you know, this mini series, I should say, has been valuable for you guys. We still have a little bit more to cover, and it looks like you want to show something on the Forex chart here.
No, I'm just showing like when, you know, the omegas appear. Like we have an omega, very weak one here. It's just Forex is not so volatile.
Sure.
You know, so you know, it's not so easy to use. But you see, you have an omega right there. You know, and then you have another one here.
Yep.
You know, and then it's really not that hard.
Well, cool. Well, with that, let's leave the audience with that. I think so much value you can get out of this. I mean, we could go and talk about stock after stock, which I would love to do, and we will definitely do more of. Here's Tesla real quick. I want to look at this real quick, but then let's wrap it up. And I like Tesla.
Very easy. Once again, right there. It's right here.
Yep.
Pick the middle.
Still another 10.
Target would be Fibonacci. 12% in 3 days.
Yep.
Another alpha right here. Target would be Fibonacci. Buy in the middle, sell the Fibonacci, whatever, would hit right here.
And this is
8%
yeah.
in 8 days. 1% a day, man. If you can keep this for a year, whatever you want, man, look at this other one. This other one is dope. Look, alpha right there.
That's
booyah.
It's crazy that like how damn accurately it's predictive. I mean, it's not like 100%, but man, it is pretty damn predictive. I mean, it's pretty solid.
Yeah, and then it's important because then you're gonna see like, oh, there's an omega here, it's not going down and shit. Because man, you're looking for divergences. First, look at the circles. No circles at all. So it's a crappy ass omega right here.
Yeah.
And remember, when you're trading volatility, you need divergency because you want the bursts, like the spikes.
Yep.
So every single fucking stock, whatever, because you have to understand trading, it's interaction within humans. So you have to expect the same behavior over and over again because humans are just that stupid.
Yeah.
But stocks are just like an elastic. If it goes all the way up, it's gonna correct, at some time. It has to correct. So that's why I don't like to, you have an omega here. That's not divergent. It's kind of stupid. Whereas after in a huge downfall, you have an alpha, that's a divergency. We could use the same thing for an omega. We want to look for omegas after huge spikes of price. Let's say Bitcoin. Bitcoin probably will give us some. Let's look for some omegas here. Oh, that's too conservative. Let's do just a little less conservative. There you go. Look, I'll give you some omegas. Zoom it in a bit. Omega. There we go. Right there. It's kind of sucky at this point if we're gonna short because you're gonna see this ground down, dangerous, But once again, do you want to buy an omega in a slump? Yep. Here, kind of bad. Yeah, you don't have such good signals at this point. But you see, patience. Yep. You have a signal here. It doesn't look so good. You just keep looking. You see, we're just browsing. You see, like we browsed through 4 assets. We found great opportunities. Yep. Well, I mean, this is awesome. I think, man, I kind of got. Let's wrap it up because I think that we've gone a bit on this one, and I feel like we have given a lot. I feel like we could come back and revisit it, but but this is Rod. I'm just trying to think through. Like, there's so many things. There's so many questions I have, and so many things that I want to dig into, but I'm trying to restrain myself. But let's do this again. I mean, thanks for coming on. Thanks for showing us the Alpha Omega Volatility Index. I mean, I think this is again another way that people can use the tool. Another strategy, or multiple strategies, really. We've kind of gone through in this. Yeah. So thank you so much for being on. And any last kind of parting words about this specific indicator before we kind of leave it at that? Yeah, understand the context. If you're looking for volatility, always try to look for, biggest gainers, biggest losers. That's where you're going to see, some alphas and omegas popping. Got it. Awesome. Yeah. Well, guys, hey, if you like this content, if you want to see more, give us a like, leave a comment below. Let us know if there's anything specific you want to learn using Spectro, trading in general. Let us know if you have any questions on how to use the tool or any of that. I'm happy to answer that. Happy to dig in a little bit deeper. Thank you, Rod, again, for always coming on, and look forward to our next chat. And thank you. All right. Thank you, Dan. See you. We'll be in touch. All right. See you, man.